What's going on, everybody? It's David Piatek, and today we're going to talk about how to make your VA home loan offer more competitive. It's something that has been coming up from a lot of people that have been reaching out from YouTube and just past clients as well that are getting into home ownership again or looking to sell and buy. And they're like, how do I craft an offer so it's competitive and that we can win, and some strategies around it? Now, some of the stuff that we talk about isn't for everyone because sometimes it may seem somewhat risky, and this is really for educational purposes only. I've used these strategies to buy my own property, and right now I'm looking at buying some investment property. So I'm going to be using the same strategies that we're going to be talking about today, especially when it's a competitive market and you have limited inventory. You kind of come across that one house that you absolutely love, and then all of a sudden there's like 30 offers coming about it. So this is why we're making this video, to give you some, I guess, maybe a reality check and also just strategies to be able to win. So one of the main things that you want to be aware of upfront is that you definitely need to get a strong qualification for the loan, pre-approval, pre-qualification. What that is that you want the lender to review all your financial documents. It's got to be ironclad, because what you don't want to happen is like a week before closing, you get a call saying like, hey, your loan has been denied. And unfortunately, we come across a lot of those calls as well. 50-50, we can help 50% of the time. The other half of the time we can't, and they should have never been pre-approved. But if you're not submitting all your income documents, tax returns, pay stubs, everything's being reviewed, you're being fully transparent, that is the best way to do it. Because what your lender is going to do, what they should do, is when you're making an offer on a property, number one, they should be CC'd on that offer by the realtor that you're using. Or if you're doing it doing it yourself, that you CC the lender on the offer along with the contract so they know exactly what the terms look like. Lenders should be reaching out to the seller's agent or to the seller and walking him through, at least in general, that yes, we have everything qualified, we have everything verified, the timeline works, and just identify any questions that the sellers may have. I'll tell you guys, that's a strategy that we use from the lending side, from all the folks that we work with, and it is phenomenal. That is how we win a lot of offers, by opening up communication. And as you guys know, the more you communicate, the better chances you have to be able to win a property. Now, this is going to be somewhat in combination of having somebody that's savvy on the real estate side, right? The person that's boots on the ground. Why that is so relevant is because when you're making those offers on properties, to be honest, a lot of times, the challenges we face is mostly on the seller agent side, or sellers not really understanding the VA home loan, how it works, what are the timelines, how to get around certain things when it comes to the appraisal process, understanding seller concessions, what are closing costs, how much credits they can give, can you buy a foreclosure? Yeah, you can do all that. That's why it's such an important piece to it, along with, like, let's say the appraisal might be coming in low because of Tidewater. And I did a whole video of that on the channel. You guys could check it out. And a realtor really needs to be aware of, hey, when we're going in, is this property going to have some challenges with what the appraised value is going to be? If it is, hey, client, this is what we might be looking at. If it comes in short, are you okay making up that difference? This is very relevant in a very competitive market, because if you pass out on that property, and then you go try to, let's say, look at another property that may be similar but outdated, and then you have to do the renovation work, that can cost more than already buying a home that's renovated. These are factors you need to think about when you're going through this strategy. A solid team that's behind you from a lending side and from a real estate side are going to help you be able to craft that and then work in your favor. Another thing with that is you definitely want to have understand the communication style of everybody on your team, because you primarily want someone that's available in the evenings and weekends, because you're not making offers during normal business hours. I always tell people, it's like I'm like 7-Eleven, always open but not always doing business, because when you're trying to make an offer on a Saturday night, someone's got to be available for you, and I'm here for you guys to be able to help you, walk you through that process, because we can help folks with the lending piece itself. Now, one big misconception that comes from sellers, not only is it the appraisal, but it's also the fact that you have these beautiful VA home loan benefits, but they feel like you don't have any money because you're putting no money down. And, we did a video not long ago about Dave Ramsey also talking about that veterans should have money to put down. That's really up to each individual person. You really have to understand what the fee structure is, because a lot of veterans do get taken advantage of when it comes to using their benefits, because they're being marketed to all the time, and you are, on the other hand, paying that cost. A big thing that goes into your budget when you're buying a property is, one, make sure that when you're making an offer on that property, that you're talking to the lender and they are walking you through what the payment's going to be on that specific property. Because if you're pre-approved, let's say, for example, $400,000, doesn't mean that you can buy a $400,000 property. That is a misconception. The way that you do things is backwards, right? You understand what is the max payment that you're qualified for, right? There's a difference too between being qualified and what your budget is. Normally, hopefully, your budget should be lower than what you qualify for, because qualification is the absolute max. Like, you're stretched to the T, and you still have other things to pay for, like food, clothes, school, whatever your situation is. So make sure you're factoring all of that, and utility costs as well. You can always ask the sell side, hey, how much do they pay in utilities every month? So you can really budget for that component. And plus, this component of your budget, what you qualify, residual income, debt to income ratio, that's going to help you determine if you really want to go higher on your offer price, but also having the right team, right? Hey, they may say you may be short $10,000 making this offer. Are you good with coming up with that difference? And the reason I mentioned that is that you don't have to, technically, because you have the VA mandatory escape clause, where if the appraisal comes in short, you do have the right to be able to get out of that property without and getting your earnest money back if it comes in short. So that is one positive piece with the VA loan. But what I do tell a lot of times, people are having an issue against that because they don't want that, because they just want to purchase the property. So these are things that you kind of have to think about when you're going in, making that offer on that property. And those are just some of the techniques that you want to be able to use. Another big thing when it comes to making an offer is going to be, there's two types of deposits you could do. One is a due diligence fee. That's typically, I see that a lot in North Carolina. It's a non-refundable deposit you put down on the property. So if you were to back out, no matter what, you cannot get that money back. And they call it in different areas different things. So these are things you want to know you going into home ownership. The other part is going to be earnest money. So, right, your earnest money deposit, that's even when you're putting no money down, it doesn't make a difference. You put some type of deposit down to hold that property with the seller. Now, that money can be refunded to you depending on how you write the contract. I'm not an attorney. You guys really need to review this yourself because there's contingencies in a contract, right? Some of the biggest contingencies that you have is going to be the appraisal contingency. Hey, if the appraisal comes in short, I can walk away. Home inspection contingency. Hey, there's a lot of issues with the property. We want them fixed. And if you don't fix them, we walk away. We get our earnest money back. You have a financing contingency, meaning that you are able to get a loan. And if you don't, you get your money back. So those are pretty like the big ones: home inspection waivers or contingencies, appraisal contingencies, and financing contingencies. Those are the three biggest ones, at least in my opinion. So if you have those contingencies in place, typically earnest money will be protected, but the due diligence fee will not be protected. Like, I bought land up in North Carolina, same thing. We had to put two different deposits down. One non-refundable, so if we back away, nothing gets back. And the other one was if we back out because whatever, financing falls through, appraisal falls through, we get that money back. But that, again, is a strategy with these contingencies, because if you've been looking for a home, let me know, drop a comment down below if you've run into them saying, hey, you need to waive all your contingencies to make it more competitive. I think that's wild. I think that's crazy because there's so many things that get discovered during a home inspection on properties that may have bad sewer lines, need water replacement lines, they may have a bad roof. You're paying at the top of the market. So unless you have cash to then dump into the property, right? Which, roof 20 grand, you might need new sewer line, that's another 20 grand, water line, whatever the case may be. And as you guys know, renovations, once you open something up, which I'm going through myself right now, there's a lot more issues that come with it. So anticipate all those things going into home ownership. Right? I'm not trying to discourage you, but I'm just letting you know there's a reality to this piece. So you have the main components of a competitive offer. You have how your team is able to present that offer and present you in the best light possible, and also knows how the VA loan how it works, because there's nuances to the program. Some lenders can do escrow holdbacks for repair items that the VA deems necessary, while other lenders don't do that. And so you may be going into a transaction thinking, oh, I love this bank because they market to me every day and I want to give them all the money that I have. But at the end of the day, they can't even do the transaction for you. And now you're scrambling at the end to be able to get this done. We see this a lot with appraisals. And then people call and we're like, yes, we can help you. We just have to flip everything. And then, about a week and a half, 2 weeks, we can make it happen. But you just don't want to be in that position. You want to be up front. And then, so that's one part is going to be your team. And then the other part's going to be structuring the actual contingencies in the contract, what you're comfortable with, what you're not, along with earnest money you put down. Obviously, the more earnest money you put down, the stronger your offer is. And earnest money, just so you guys know, just like with this due diligence fee, if you end up closing on that property, that will count towards paying for closing costs. So you're not really out that money per se. So even if you did something crazy like, I don't know, you put down $50,000 earnest deposit, you did no money down, and closing costs were $10,000. All that means at closing is you get a check for $40,000 in this example. So you could definitely work it to your advantage. And I'd say the last thing I'll leave you guys with is asking for seller credits. You got to be realistic. When you're looking at a property and the first thing you think of in your market, and let's say it's very competitive, multiple offers and everything, your agent may tell you that, hey, basically on average, it's 5 to 10% over list price is the closing price, right? So example, hey, property this is at 100,000. They have a 10% increase typically for closing, meaning that most people will buy that home for 110. And you come in and say, I'm buying this house for 80,000. That's what I'm going to make an offer with. That's not realistic, but it is your choice to be able to do that. So just be aware when you're going into this. And saying that it's too competitive, I don't want to be in this market, I don't think that's the answer. If you are able to afford something in today's prices and you want to be a homeowner, right? You don't have to be. Then it's time to execute now, because the same thing that happened to people back in 2020, 21, where rates are super low. They're like, I'm going to step back. I'm not going to put 50,000 over asking price. And then what ended up happening? Values skyrocketed. And then also interest rates went up and values didn't really go down. So historically, even if you bought at the worst time possible, which was like 2008, 2009, you still did way better than most, because the home values have recovered significantly since then. So hopefully you guys got some good value out of the video. Please hit the like and subscribe button, and I'll get you guys on the next video. Thanks.